This meeting is being recorded.
Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with Taylor from Life Goal Investments. How you doing, buddy?
Doing great. Well, I got a little indigestion over what's going on in the market right now, but outside of that, I'm doing great. Thanks.
Yeah, it's funny. We haven't talked since last week, which obviously between today and last week, we had this all-important Fed meeting. I think both of us called 75, which again, I think everybody and their brother was calling. Some of us
Yep.
were hoping for a full basis, myself included. Didn't happen. But basically, if people go back and watch our playlist from last week, I was pretty adamant that the most important thing was going to be the dot plot, because I don't think the market appreciated how high, how fast, and how long. And sometimes you go 3 for 3. And I think that's what happened last week. What do you think?
Yeah, I think you're spot on. It's funny to start to think about, okay, the dispersion of these dots and where they were going to be, and everything that we talked about last week was like the range of opportunities is really wide, and everything just got really aggressive. Really aggressive.
Everything moved up. Everything got closer. And there's not a rate cut to be seen in 2023. Again, these are their expectations, but
Correct.
They clearly wanted that off the table. This Fed pivot nonsense, they
Yep.
shot that in the head 3 times.
Yeah, I did a little looking around this morning, and I was looking at just how long historically it's been from the peak of the rate cycle as to from there, how far out it is that they cut. And generally, I was shocked by this. It's between 6 and 7 months. So I didn't think that things really operated that quickly all that often, but it shows what they do is they come in, they break the economy, and then they have to cut. Like that's
They
very
come in,
simple as
go too far, break the economy, and then cut.
exactly right. And that's why this whole soft landing thing is pretty laughable to think about. Yeah, we'll soft land because we've done it so many times throughout history. We've been able to soft land this thing, so easily. There's never, ever, ever been a time that the United States has had inflation over 5% and not caused a recession to bring it back in.
Oh yeah,
Just for the record, we were at 9 earlier this year, 9.1.
Yeah, I totally agree, and was calling that very earlier in the year. Like, the only answer to this is a recession. Whether you guys like it or not, you can argue when it starts and when it finishes, but we got to get there, right? And I've always been under the opinion, just rip the damn Band-Aid off. I would rather have a sharp down and which provides for at least the opportunity for a quicker. I hate the slow, because for me, the .com crash, the 10-year, the last decade or 8 years, whatever it was, that sucked.
That was brutal. That's brutal. When the market goes down essentially for 3 straight years and to a relatively significant magnitude at 2 out of those 3 years. So I think, don't quote me on this, but I would say from 2000, 2001, 2002, I think 2 of those years were 20 plus down percent years. You got to 2000, the big washout, and then it kind of muddled along through 2001. You're like, all right, we're finding a bottom. Bang, down 2002. That's worse than what you see in 2008, where it's just you get your knees cut out from you quickly. And then we're back up, and the economy.
You build a foundation, you figure it out. Some people go bust, some people live on. Yeah, I'm very much in the break the thing fast. It will be painful. It's going to be painful anyway.
Correct.
I would agree that if you rip it off fast, the magnitude or violence of the pain will be much more severe. But if you look at the totality, I think without question, the slow grind is far more painful.
It's brutal. It's brutal. Yeah. I do think we're starting to see some green shoots on the labor front.
Green shoots meaning brown shoots?
Yeah, I knew you were going there.
What are we talking about?
Bad news with labor, which is essentially good news from the
We're seeing weeds. Exactly. I guess we're seeing weeds. That's what we're seeing. It's not grass, it's weeds. The damn dandelions are back.
Dandelions coming up. Exactly. No, it was
so bad. We're actually celebrating bad news now.
It's terrible. It's a funky world we're living in right now.
Oh my
But that's what happens when the Fed's on the brakes. So you did see a pickup in jobless. I'm sorry, not in jobless, in job openings. You saw a decrease in job
openings. Yeah.
Yep, by 0.4% in July. That doesn't sound like a huge number, but when you look at it, that is the
reverses a trend.
It reverses a trend in a massive way. And it also is the largest number of a month-to-month decrease that we've seen outside of a recession. So the only times we've seen more is in a recession. It's arguable whether we're in one right now or not. We'll find out down the line where things go from here. But unemployment is still super tight. But I think what you see is these job openings are getting filled or disappearing. And what you see from that is that's kind of the precursor to an unemployment rate starting to pick up some.
Yeah. So again, higher, faster, longer. But also important, we talked about last week, was going to be the Fed's expectation for both unemployment and GDP.
Right.
I have to tell you that I physically laughed out loud when I saw their expectations. These are so comical as to be almost a crime. Did you see the
Right.
numbers that they put out? I was
Oh,
like, are you guys serious?
This is just perpetual. They talk about how strong the economy is earlier this year with all of the writings on the wall, and you're going, what are you looking at? I can understand you look at labor, but that's the only thing you can point out and say, yes, this is really strong right now. By the way, and I've said this till I was blue in the face, and you obviously know this, but labor is also the ultimate lagging indicator. Labor will roll over last when things are already bad. So yes, it's been comical of the strength of the economy they've been talking about now for 6 months, when we can all see the writing on the wall and saying a hard landing's coming.
Yeah. It's not often I laugh out loud when I'm reading an article. I'm in my office by myself. I mean, that's not a normal function for me, but I'm reading the dot plots and I had a visceral reaction and laughed out loud. So here, and I don't know which one got me more. I think it's unemployment got me more, but they were both crazy. So this is from memory. Expectation for GDP growth this year, 0.2. Next year, 1.7 from memory.
Okay. You love it. You love it. You've been saying a harsh winter is coming throughout the year of 2023.
Not happening. Not happening. Sorry. I don't know how you get from here to there. Like if you get 1.7% growth next year, inflation's not coming down, buddy. I mean, I mean, it's just like, what are you thinking?
The numbers don't make sense, right?
And then the second thing, this is the one that just like, you're joking. You're joking, right? This I'm being punked. This is the unemployment rate. So currently sitting at 3.7. It's, U3, not U6, whatever, but 3.7. I believe they talked about it basically not moving this year. I think like 3.8 or 3.9, but next year peaking at 4.3.
I was going to say 4. I thought it was 4.4. Yeah, 4.3. You're right. Yeah.
Whatever. 4.3, 4.4.
Yeah, we're going to put on 50 basis points to that number, 0.5%. Right. Okay.
Yeah. When interest rates on the mortgages
do what you want to do. You just can't do what you want to do and have that simultaneously be the reaction.
Yeah, because again, like this is why the dots don't line up to me. Like if you got 4.3 as a peak unemployment next year, the funds rate is not going to 4.6, which is currently seen as the terminal rate. It might go to 6.6 because they're going to have to break shit. If we have, again, this is just the reality. I'm not going to be happy with an extra 2 million people unemployed. That's not what I'm saying. I'm just saying, if you want 2% inflation, you just can't have both. I laughed out loud. This was comical.
Well, that's called a soft landing. And we both look at that and say, that's laughable. That's laughable. You can't have a soft landing when inflation got to 9%. Got about 9%. You can't have a soft landing when the inflation goes above. We have never seen half that number again without it causing a recession, bringing inflation back down. We doubled. It is what it is. And unfortunately, to your point, it's tough that you have to start to root for unemployment. That's not a good thing to do.
No.
But we need to, and Jay Powell needs to. And he said that. He's like, listen, we know this is not a great thing to talk about, but we need more people not being employed so they don't have as much loose change rolling around their pocket and go out and, compete with other people to buy goods, which is inflation.
Yeah. Yeah, it's funny. The weekly unemployment claims is one of those numbers that very few people look at. It's probably going to be the most important indicator because that will turn first, right? It'll go from 232 or whatever to 400.
And it's so rapid.
It's every Thursday.
Every single week you're getting that print and you get an idea of, okay, this is what happened just over the last week, right? So
so you get a surprise, 480. And I'm just going to pick a date, November 13th. I believe the stock market rallies. The stock market is going to rally the first time the unemployment shot. How wild is this?
I agree, but I 100% agree because every time, what was it? July, we added 528,000 jobs or something like that.
Doubled the expectation. It was crazy.
Right. And the market got whacked on that, and rightfully so, because it just said we're not under control at this point. Again, I'm also going to be paying attention to the job openings. If that number continues to decrease, that's going to bleed through. Yep. That's going to bleed through in unemployment.
That's a monthly number, Jolt?
Correct. Yeah. So we haven't gotten August yet.
Yeah. So we get weekly unemployment, and then we get Joel. I agree. It's all about those numbers. And then, of course, we get PCE Friday, right? What's going on with wages, services, all. I mean, it's, I guess we got to wrap this up. Fed discussion. We got 2 more Fed meetings, November 1st, or Fed announcements, November 1st and December 14th.
December. Yeah. Somewhere. Yeah.
13th,
somewhere
14th,
mid-December. Yep.
whatever. I'm going 75-50 at the next 2 meetings. What do you got?
Yeah, I haven't put any thought into this for the record.
You should
because
just
so
agree
far
with me
out.
because you've been wrong so much.
Because I've been too damn slow the whole entire time. No doubt. What was so like? I'll give this and then I'll give you my answer. My whole context as to what was going on and why the rates weren't going to be able to continue to go up is that the economy was going to be more obviously breaking, and I was wrong. And your take on that was the labor market's too strong. That doesn't make sense, and you were right. So yeah, I think that. I mean, I guess I'll stay on the lower side because I think that I honestly think the other side of you. I think they're going. I think the cracks are there, so I think they'll start to expose themselves over the next. Couple months.
You've been in Wall Street too long. This 10-year history in Wall Street's got you biased. All these Kathy Wood types are like, oh, they're gonna pivot in September.
Look at commodities. Look at commodities. Commodities are getting raked over the coals. Commodities right now are 20% off the highs. From just mid spring, oil's off.
Dude, this is like talking about a firm being down 99%. Just because you had a peak number, you tell me about stocks being down that have no value. This is just
lumber down 70%. Do you like that number?
What was lumber 2 years ago?
Oh, it was on a rampant tear. But this is telling you what's going on in the housing market. No one's building. That's what's telling you. 50-50. 50-50.
Okay. All right. You answered the question. You're wrong again, but I appreciate you standing out on a very shaky limb. I appreciate you. I'm just kidding. You do amazing stuff on Life Goal Investments Instagram page. You are really trying to educate. You're taking on important topics every day. What is the page's name and where should people go follow it?
Yeah, I appreciate you saying that. It really means a lot. We're at Life Goal Investments, plural, Life Goal Investments on Instagram. And to Michael's point, it's usually macroeconomic stuff. And then we try to bleed it through like, here's maybe what you should be thinking about from an investing standpoint, et cetera.
Yeah, it's really well done. You really simplify very complex topics. You also have fun. I can see you having fun with it. So that really comes through. So keep it up.
Appreciate you, Michael. Thanks so much.
You got it.